Thanks for tuning in to your daily dose of quick real estate updates, local housing trends, and market data, plus tips, tools, and strategies to help you buy, rent, or invest with confidence. You're now getting ready with RealiCare Reports, powered by the innovation team, Cami and Rex. Now go grab your favorite morning beverage, whether that's coffee or tea, and let's enjoy this episode.
Hello and welcome. If you're following the economy, you know shelter inflation is, well, a really big deal right now.
Absolutely. It's a huge component of overall inflation.
And this Thursday, we're expecting the latest official numbers from the Bureau of Labor Statistics.
Sounds great.
So today, we're doing a deep dive. We want to unpack what those numbers might show, looking specifically at a forecast that uses Zillow data, gives us a slightly different angle.
Yeah, it's a useful perspective. We're trying to get a sense of where things might be heading based on this particular forecast and, why using Zillow's market data is relevant here.
Okay, let's get straight to it. What's the main prediction from this Zillow-based forecast for the March numbers?
Well, the headline is basically more slowing. They're expecting the deceleration in shelter inflation to continue.
Okay. Any specific numbers?
Yeah, they put out annualized growth rates.
Yep.
For owner's equivalent rent, or OER, they're forecasting about 3.47%.
3.47%. And for actual rent?
For rent for primary residences, it's forecast a bit lower, around 3.10% annualized. So it's still growing, but growing slower than before.
Right. Continuing that cool down trend we've seen developing. Now, that's March. Does this Zillow analysis look further ahead?
It does. What's interesting is that their outlook for, say, the next 6 months is pretty stable. Not huge changes expected right away.
Okay.
But they do anticipate a more significant softening.
Right.
A bigger slowdown.
Yeah.
In the overall market rent, as measured by the CPI later on.
Later on, meaning?
Towards the end of 2025 and potentially into 2026.
Yeah.
So there's a hint of a bigger shift coming, just maybe not immediately in the next few months.
Interesting. So this forecast, it's not just someone throwing a dart at a board, right? There's a model behind this?
Oh, definitely not. It's based on a specific model. It essentially looks at the relationship, historically, between Zillow's own rent index.
That's the one tracking asking rents on new leases.
Exactly what landlords are asking for vacant units. It compares that to the official CPI shelter components, which measure rents for all renters, including those renewing existing leases.
So it uses that leading edge, the new lease asking price, to kind of predict where the broader measure is going.
That's the idea, yeah.
Yeah.
It tries to see how those asking rents eventually filter through.
Makes sense. What are the sort of key ingredients in that model? What drives the forecast?
There are basically three main things they consider. First, what they expect to happen with those on-market asking rents going forward. They actually have their own forecast for that, the ZORF.
Zillow Observed Rent Forecast, right. Okay, what else?
Second, they have to make some assumptions about landlords. How quickly will landlords adjust rents for people renewing their leases when market rents outside are higher?
Okay, that lag effect.
Right. And the third piece is renter mobility. How often are people actually moving?
Why does mobility matter so much?
Well, think about that big rent shock we had in 2021 and 2022. If people aren't moving much now, fewer renters are actually signing new leases at potentially still elevated rates compared to their old rent.
I see. So if mobility stays low, fewer people are directly exposed to those peak market rents from a year or two ago, which dampens the overall CPI measure.
You got it. A lower turnover rate means the average rent paid, which is what CPI measures, rises more slowly.
Okay, that clarifies the mechanics. So bringing us back to why someone listening should care. This isn't just academic. This forecast, if it pans out, hints at future housing costs, right?
Absolutely. Gives a potential glimpse into where rent expenses might be headed. And, shelter is such a big part of people's budgets.
And the wider economy. If shelter inflation does cool as predicted.
Well, because it's such a large weight in the CPI, a slowdown there really helps ease overall inflation pressure. That, in turn, could influence decisions by the Federal Reserve on interest rates, potentially impacting borrowing costs, jobs, the whole economic picture.
So, wrapping the core findings up, the Zillow-based forecast points to a continued moderate slowdown in shelter inflation for March.
Yes, in the near term.
But looking further out, maybe towards late 2025, their model suggests we could see a more pronounced cooling in rents.
That seems to be the longer-term outlook based on their current modeling, yeah.
Yeah.
Analyzing those new lease trends, assumptions about renewals, and, crucially, renter mobility points towards that path.
Okay, so here's a final thought to leave folks with. This model relies on certain assumptions, right, about mobility, about how landlords act.
Right.
So what happens if those assumptions change? How might, say, an unexpected surge in people moving house or landlords getting more aggressive with renewal hikes? How could that alter this forecast? And are there other economic signs we should watch that might either confirm this path or maybe suggest things could go differently as we look towards the end of next year? Something to ponder.
Well, that wraps up today's episode of Reality Reports, where real estate meets real life. For more updates, tools, and insights that will help you buy, rent, or invest with confidence, be sure to follow, subscribe, stay connected, stay informed, and stay ready. Until next time.